Atul Suri from Marathon Trends-PMS joining in to analyze the market mood. Atul, hi, good morning.
Hi, morning.
Good to have you in the studio.
Nice to be here.
It's a bit of a crossroad, the market right now, right? When crude has cooled off, fortunately, but global markets have just about begun their correction. The Nifty seems to be in this range of 10,000 on the downside, 10,600. We're not able to push higher than that. Do you think we can
I totally agree with you, and I'm a bit disappointed in the short term because, you know, after we went down to 10,000, we were extremely oversold. And a bounce was inevitable. We just needed triggers, and we got some very big triggers with crude. I mean, nobody would have told you where crude is today. I mean, you give an arm and leg, and crude is there and not seeming to bounce back. It continues to weaken, and yet it is a very, very placid kind of pullback. So if I look at the Nifty, my first level that I would have looked for was 10.7. 10.7 is where we went, tested again, went back and retested 10,000. This was the first hurdle. And I think any short covering bounce should have easily taken us beyond that. But really, it's struggling at 10.5, so it's not been able to even take that out. So I feel in the path to recovery, my first stop would have been 10.7. Beyond that, I would have actually thought with this kind of crude bounce and the way the NBFC crisis seems to be dissolving, really, we would be much higher, more towards 11,000. So really, the bounce in the Nifty is there. But it's a bit disappointing. And when I look and try to analyze really what is it that's causing it to relatively underperform in such a big way, the only dark cloud I see is the way global markets, especially the US, is performing. So all in all, yes, there is a bounce, but I would have expected more.
You study the dollar index as well as the Dow charts as well. Do you believe that this is just the tipping point of a bigger correction which is in store? Maybe that's keeping us a little back?
When I look at the US charts, that's what seems. We look at the Dow, definitely that's the frontline index. But if you start looking below the hood, you start looking at things like, you know, the Russell's 2000, which is a small cap index, you'll find that the damage there or the kind of chart patterns that are emerging in the US are not very encouraging. I mean, you look at the NASDAQ also. And you have had some marquee FANG names, you like it or not, they move the market, but the way those charts are panning out, so I guess that there is a dark cloud as far as the US markets and charts are concerned. The only silver lining in all this is that when I do a ratio chart of EM versus the US, see, the emerging markets have been underperforming the US for the last 8 to 10 months, really, right from Jan. I find that they are at record oversold levels. On a longer term chart of the EM versus developed markets, you'll find they are almost such oversold or underperformance was last recorded in 2002. So the silver lining for me, the possibility, I am preempting it.
That we could fall lesser.
We could, either the US falls, and we are seeing that in the last 2-3 days, that the US has been falling, and the day before yesterday was a big whack, about 600 points, and yet we closed positive. So maybe emerging markets may not fall, or in case if US goes in for a longer term consolidation, money may flow to the EMs and you may start seeing a recovery. So of course this is very, very lot of conjecture. It's something which I'm preempting, and maybe it's my bullish mindset which is trying to see the silver lining. But to sum it up, yes, the US charts are not looking very good. If certain breakdown like Dow below 24,000 again could be a bit of a problem.
Okay, give us your own sense on the dollar index. How are you mapping the dollar index? Because the last
very spiky, very spiky. It's a fearful chart because you know anything above 85, it is in a positive or a bullish zone. For the dollar index to actually start looking dampening, it will have to go below 85. So a spiky dollar index is definitely not good for commodities. We are seeing that. Yes, it does have a knockdown effect. So it's contradictory to my theory that EMs may relatively outperform. But yeah, there are, as I said, some contradictions out there.
But what would work very well for EMs is oil.
Yes, but it should have played. I mean, I think Brent would go to 60, 61 level, and I think the WTI would go to around 50, 51 levels. But the major part has been done. The back has been broken. And you should have seen that kind of, you know, a lot more bounce or a lot more spikiness. And that is what is really disappointing me on the screen at the moment.
Okay, so I'll take the clock back, and I'll take the clock back when crude was at $60.
Sure.
Nifty was at 10,500.
I think it was also at 11,000 plus.
Thereabout. I mean, we were not like some 12,000 and we came down to 10,000. That's one. Second, the 3-year chart of the Nifty is not like a gangbuster chart. It's not like you've got 50% returns.
Definitely
it's been a 10, 15, 20%. It's been a pedestrian kind of
good and bad actually.
Good and bad,
so you've
right?
had good years and bad years.
And I'm just taking the complete different view. Small and mid-cap stocks have corrected.
Right.
NBFCs have corrected. So the so-called haloed, overcrowded trades have corrected. And I can counter back by saying that, look, Nifty never went up. So the scope for correction was also very less. So if the correction is less, the bounce back also will be less.
But I think, Nikunj, we've had Nifty that has been an outperforming market. Yeah. If you see as of Jan or even of April, May, June, India and US were the only markets making lifetime highs. Yeah. So relative to the EMs, India was the outperforming, was the marquee market. EMs since Jan have been on a secular downtrend. India had a very good bounce in May, June, etc. We actually went out and made new highs. So India did the catch up, or the fall that happened was very sharp in October, September, October. So it's not that India has been a relative underperformer. In the EM space, I think in the EM space, India has been a relative outperformer. Yes, vis-a-vis the US, it seems much more dampened. So the question where I would agree with you that if you look at a 3-year chart, it's not that we've had spectacular returns. Exactly. You know, you had this blip in the mid and small cap index. You talked about it, but how much did somebody capture? In fact, more people got hurt than actually benefited from it, because most people came in the last 1 year, and those stocks are like taking you back by 2 years. So net, yes, the whole last 2-3 years have looked good in spikiness, but how many have captured it? Very few.
Next 3 months, next 6 months, next 12 months, markets will remain volatile, whether it is crude, whether it is elections, whether it is FI activity. How do you propose one should make money? Go long, go short, or combination of both?
I feel that we may be in a very larger range at the moment. I would say the 10,000, 11,000 again, it's a 10% range, but we could have that kind of move. We are midpoint right there. But what I find interesting, Nikunj, is that in this also 500-point blip, you will start seeing that how there are sector churns happening. You are seeing new trends emerge. Just a case in point, ICICI Bank touching a new high yesterday. I may have a vested interest in the stocks I talk about. Look at the charts of some of your infra stocks. L&T for that matter. So I feel that there is good churn or very interesting stuff happening. I think my favorite pet theme is consumer. I feel that the consumer charts are still very, very intact.
The levers, the Britannias, the ITCs.
They are still very, very intact.
Which is the strongest one?
Let's not talk about stocks, because again, I will have a vested interest in that. But I just mentioned, so what I'm seeing that even in these smaller 1,000-point ranges, you will have a churn. You will have sectors and themes that will outperform, and some things will just go off or, you know, do nothing for that matter. That's why you're going to have like stocks touching 52-week highs and stocks touching 52-week lows in the same day, which is something you do not see in a runaway bull market or in a runaway bear market. They're all loaded on one side of the spectrum. So I feel that you will see that kind of space. It will be more a question of whether you are getting into the right themes. And there are some interesting spaces happening. Specialty chemicals. Again, it's not a frontline sector, very few liquid names, but you look at the charts, they hardly corrected, and they're all nudging lifetime highs. So I guess you will have to really play out that theme. And that's how you'll take it from here.
You know, this divergence that you talked about is playing out within autos as well. And they've had a bit of a rough patch when it comes to earnings as well, selectively albeit. Do you see this decline as a buying opportunity in any of the names?
Yes, I think so. I feel that some of these have been extremely oversold. And you're seeing significant bounce backs that are happening. So that's what I said. Going ahead, you know, I don't see that you're going to have a runaway bull market. You can have a good 1,000-point range, which is a big range actually, which is 10%. But in that, there'll be some sectors or themes. Your whole the commercial banks in the private space are very, very good looking charts, you know, and I think that they could be
beyond ICICI Bank
and see, remember that these were themes or sectors that have not participated in the last 10 years. They are very under-owned. They are very, you know, there's very little ownership in those spaces. Most people are underweight. So I feel that this could also be an interesting opportunity. So the markets will keep having activity. As I said, at the moment, there is good, there's bad. Crude is off. That's fantastic. I think the whole NBFC issue slowly seems to be dissolving. I feel that EM outperformance can come. To offset that is you've got a little bit of weakish global charts, especially the US, and elections. And I think this whole election thing is highly overrated, you know. Who really knows the outcome? I think even the politicians themselves fighting elections don't know. So I feel it tends to get very overrated. It becomes great talking points, but I personally think you have short-term volatility. I don't think they're going to be trend deciders. Trend deciding is liquidity. and liquidity or flows that come domestically and globally. And there's been no better case in point than the DII flows that we saw last month.
Yeah, absolutely. So this is what's going to work on the upside, and these are good buys.
Yeah.
What will remain laggards, and what will be at the other end of the tug of war? What will remain weak sectorally?
See, again, I really think that, you're not going to have some outright bear trades really for that matter, but you will find spaces like real estate, etc., which are still going to be under the cloud. They have underperformed. I also feel that the whole small and mid cap space, again barring a few stocks which come out with good numbers or which are certain genuineness, I feel is still going to be under the cloud. So I feel that there are going to be the breadth point of view. This is where the breadth is going to be a bit under the cloud.
Very quickly, I know you're not going to talk stocks,
sure,
but I want to pick on L&T.
Right.
The 3-year chart of
Right.
L&T, despite earnings, has
Right.
not done much.
Absolutely.
So what are you seeing in terms of just the chart patterns for you to give that sense of bullishness and optimism?
So these are charts which are done 3-year, 5-year kind of consolidative patterns. They've come to lifetime highs, disappointed, again come back. So now they are pushing towards lifetime highs. And the interesting part is that they are pushing not when the market is up there, when the market is bullish or frothy, because that is a function of the Nifty. They are components of that. But they are doing well when markets are not doing well, or when markets are struggling, or at best, a bit limp. So that outperformance or that relative strength that you're seeing in them is the bullishness, which is something you've not seen in the last 3 to 5 years. Last 3 to 5 years, these stocks have gone up because the market has gone up. When the Nifty makes a lifetime high and you're a Nifty stock, you're bound to find your share of buyers, But the ability to not fall in this correction relatively and to push to new highs when the market is 4-5% from recent lows, I think that is the silver lining. And importantly, that these are actually sector leaders. They just don't represent one stock. They just don't represent one index stock. They represent a theme. L&T represents a theme. And that is why you'll also see it in a lot of infrastructure.
Now, if I look at the importance of cycles, now you understand the importance of cycle. Every cycle has an age. No pun intended here.
Absolutely.
But every cycle has an age. Consumer stocks have been in a long cycle now, 5 to 7 years. We can argue about whether it's 5 or whether it is 7, but consumer has been in a bull run. Cyclicals, the bull run has just about started. ICICI Bank, L&T, they've just started making new highs. So for next 3 years, would you believe that consumers will stretch it more to another 3-4 years, or one should align with this new leadership which now cyclicals, capex and corporate banks exhibiting? Because this is the new leadership, that is the old leadership. Would you build on the old timers or would you bet on the new leaders?
I prefer longer term charts and trends, and I don't think that just because consumers have moved for 5 years, they can't move for 10 years or they can't move for 20 years. I feel that it's a very, very secular and long term theme. It doesn't give you excitement.
So HUL versus ICICI Bank, you would say go for HUL?
No, time frame.
Okay.
What's your time frame, Nikunj?
Okay.
And what is the level of excitement? See, you're an anchor. Okay. You have to create excitement every day. I'm a fund manager. My job is to not create excitement every day.
But you also trade.
No, I'm not a very active trader or that. Now, no longer do I do that. So essentially, our themes and motives are different. For you, you will have an ICICI Bank talking point every day. Lever will give you a talking point once in 3 months. So the thing is that you have to choose where you want and how you want to manage your money. So I personally prefer consistent compounders. That's my style. Over the years, I've realized that's my theme. So I'm never into the very exciting space and bottoms and tops. I like consistent compounders. If I can compound at 25-30% year on year, I guess I'm pretty
I would
okay.
just throw in one more element in the mix, and then, pardon me for just interrupting, Aisha. A classic name like iShares, when iShares was at 30,000, 35,000, December and January beginning, it looked like this ultimate dream stock. The charts were great, earnings were great. Look at what's happened there. My only fear with some of these so-called consumer and haloed stocks is that the P multiples are so expensive that the headroom fundamentally is not there. Would you still bet on them?
Yes, I would.
You would?
Because I feel that a lot of them will surprise you on the earnings. So what looks expensive today can get cheap tomorrow. The function is that earnings have to come. So I don't want to take names, but to counter that, I can give you 5 other stocks which have always looked expensive.
I would love to get
which have always looked expensive. But the fact is that you are much better off in those stocks than rather getting into this today, getting into that tomorrow, and getting into this and getting into that is very good talking points. They look very cute in terms of our Excel spreadsheets. But when you go to do it, you realize that there is a lot of challenges in doing that. So you're much better off being in a longer term compounders.
Okay. Currency has been an important angle for our market as well. Have you mapped it against, the export oriented names, and whether the opportunity still presents itself in IT, pharma, some of the other export-oriented stocks?
So
would you take that bet?
I feel that two very interesting things that happen. I would just want to cover, you didn't ask me, is bond yields.
Yeah.
I think the 10-year bond yields is also a very, very interesting chart.
Indian or US 10-year?
Indian. Yeah, US obviously is on a very vertical, it's on an up move. You may have short-term things, but it's definitely on upscale. But I think the bond yields correcting is one thing very positive in India. As far as the dollar goes, yes, I feel that it would weaken vis-a-vis the rupee, but I don't think it's going to be massive. I don't think it's going to be like a total fall off. So it will be very calibrated. I don't think that there's going to be a very big sell off in the dollar vis-a-vis the rupee. So when it comes to IT and pharma, I feel it is going to be more based on individual stock performance. You cannot attack IT as a theme, just play on currency. Then you rather play the currency. If you have to do that. So it's best that you will have to bifurcate. Even in pharma, you'll find that there is very divergent performance. We've been talking a lot about pharma, but stocks are behaving very, very differently. And I think that goes for IT also.
But within that, you're finding winners in pharma.
There are spots.
Atul, what we've discussed essentially is the importance of compounders, focus on wealth creation. But what should one avoid? What should technically or fundamentally, or where you get a sense, look, the party is over, one is better off giving them a skip or by going short? I mean, you're a trader at the heart.
Yeah.
So I'm sure when you smell an opportunity, see an opportunity go short, you will not resist yourself.
So I feel that stocks where, especially in the mid and small cap space, where numbers are not coming, Nikunj, I don't think you're going to see those prices for years to come.
Has the mid cap index and the small cap index peaked out, and we may not see that high for many years to come?
I don't know many years to come or no. But the number of stocks that will make those levels will be very few.
So 2017 in a sense,
I would not say that you write off that sector. Definitely there'll be some massive gems out there. You'll make big money. But how it was a year ago or 2 years ago, just put your hat in that. Just allocate money in that thing, and you will have it across the board. I think that is not good.
Give me a broad composition of your portfolio. Again, plus minus 2-3% here or there. How much do you own in financials? How much do you own in small cap? How much do you own in non-financials?
So I am a 50% large to 50% largish mid cap. So I'm more in the mid cap, large cap. My whole journey, or what I look for, are mid cap stocks that are transitioning to large caps. I think that is a very sweet path. So that is a trending phase of the journey. I'm not into picking bottoms. I'm not into picking turning points, because that's not my ability, or that's where I personally think I don't excel. So I'm more into the mid to large cap, but which are transitioning. So I kind of classically say that, I look at stocks which are in the NSE 500, which come into the F&O, which ultimately go into the index.
But they also get kicked out of index one day, some of them.
Well, but I guess, you as
he's not talking about the reversal. He's only looking at the one way process.
So as somebody who looks at price, you always have certain risk management in place, and you have certain exit strategies, and price itself. So before stocks get kicked out of indexes, you'll always notice our index is the ultimate trend follower. Yeah. If you look at it, if you go back and pull the index or compose the index that was there in 2008 top, you'll be nowhere where it is today. So the biggest trend following instrument in our markets is the index itself. So what you're competing against is not a passive index, but you're competing against the ultimate trend following mechanism, which is the index
itself. But if you've given us so much, Atul, why not give us a name also, which is going to move from mid-cap to large?
No, I mean, one doesn't know, you have fingers crossed and things like that. But I think that there are some spaces in the consumption space, which still are in a very, very larger bull market. They are in transition. They may look expensive, but as long as you consistently compound, I think you will create a lot of wealth.
Okay, I wish we had more time and we could dig out more stocks. Try and do that, but great to have you in the studio.
Thanks a lot. Thanks for having me.